2020, our centenary year, was a year like no other. The need for efficient and resilient distribution networks to enable the basic functioning of society became ever clearer, whether that's online groceries being delivered to those shielding, or all the other goods and services that businesses and consumers rely on simply to operate and survive. Beyond the tragic health issues, the pandemic also caused hardship for many people across the communities in which we operate, which is why we launched the SEGRO Centenary Fund early in order to deliver immediate support to those in need. And despite these turbulent times, we've reported a strong set of financial results, delivering a 10.8% increase in adjusted pre-tax profits to £296.5 million and a 16.3% increase in adjusted net asset value per share to 814 pence. It's also been the year when we've reviewed, challenged and refreshed our approach to ESG, and as a result we're relaunching our responsible SEGRO framework with more ambitious goals, a broader reach and a focus on three long-term priority areas. Firstly, championing low carbon growth with a target for our entire business to be net carbon neutral by 2030. Secondly, investing in our local communities and environments to improve the physical environment around our estates, but also to create employment opportunities for the residents of our local communities. And thirdly, nurturing talent with a goal of creating a truly inclusive culture and building a more diverse workforce. We believe that working towards and achieving these goals will ensure we remain a business fit for the future and the partner of choice for our customers and our other stakeholders. Over the past decade, we've positioned our portfolio to benefit from the structural trends such as e-commerce growth. Those trends have continued apace, and in fact they've been enhanced by the pandemic, which has translated into increased occupier demand for modern, well-located warehouses. We've also continued to drive operational excellence, and through that, a laser-like focus on our customers, which has led to a record leasing performance, with £78 million of new rent being secured in 2020, including a further £41 million of new pre-let developments. 2020 saw a record level of investment as we seek to capitalise on the favourable trends and support our customers with their own growth plans. We invested a net amount of £1.3 billion in the year, with £530 million going into the very busy and active development programme, which saw 47 development completions worth £47 million of annual rent, of which 84% has already been leased. Another £286 million of investment went into some excellent land purchases to add to our future development capacity, and £603 million went into acquisitions of investment properties, including 3 rare, strategically located urban estates in London and Paris.
The clear strategic focus of the business, underpinned by a rock-solid financial position, to provide the basis for a very positive set of financial results in 2020 despite the pandemic. On the income statement, adjusted earnings grew 10.8% to £297 million. Earnings per share were up 4.1% to 25.4 pence, the lower growth rate due to the new shares in issue from the equity raising in June. We've grown the full year dividend 6.8% to 22.1 pence, reflecting a payout of 90% of profits in line with our dividend policy. 2020 saw a real step up in demand for industrial and warehousing property, with investors attracted by stable and growing rental income from a high quality occupier base, particularly in a world where risk-free rates are zero or negative. As a result, we saw the valuation of our property portfolio grow strongly, up 10.3% to £13 billion. Yields have tightened across the board, around 30 basis points, reflecting that investor demand. But the values have also recognised the value creation and the rental growth from our asset management initiatives and development projects. The net asset value per share is up 16.3% to 814 pence. We continue to maintain a robust balance sheet with low leverage and high liquidity to provide the platform for growth. We raised over £1 billion in 2020, mainly through a £680 million equity issue in June and a €450 million debt issue in July. As a result, the balance sheet remains exceptionally strong, with loan-to-value of 24%, a £1.2 billion of liquidity through cash and available facilities, a long-term debt structure with 10 years of average maturity, and a very low cost of debt of just 1.6%.
We're starting 2021 in great shape, but but in no way complacent given the unknowns associated with the ongoing pandemic. However, we have several factors in our favour. Supportive structural drivers of demand, a modern, well-located portfolio, a superb land bank with ongoing development projects already worth £54 million of potential rent and with the potential to add more in the coming months, a strong balance sheet, and an excellent pan-European operating platform across our 14 offices. But perhaps most important of all, we have reset and relaunched our responsible SEGRO framework with 3 clear focus areas and ambitious targets which we believe will truly position us to deliver on our purpose of creating the space that enables extraordinary things to happen for all our stakeholders. So we're confident in the prospects of the business.